A lot of folks have been concerned about ESG as a driver for positive impact. But at the end of the day, we're talking about managing the risks and opportunities of these issues to a company, not about the good work that they can do out in the world.
This is Net Learnings, the podcast that keeps finance and banking professionals ahead of the curve. In each episode, we focus on career growth and practical advice, while mixing in the occasional war story. Join us as we tap into the minds of leaders and experts at some of the world's most notable financial services firms and enterprises. Let's get started.
Hello and welcome to Net Learnings. I'm your host, Kyle Peterdy. Our guest today is Noah Miller, co-founder and chief advisory officer at Row Impact, a North American-based ESG advisory firm. Some of our listeners may also recognize Noah as one of our CFI instructors and authors. He's had a hand in the development of many of CFI's ESG courses, and we just love tapping into his deep expertise. Noah, thank you so much for joining us on the podcast.
My pleasure. Thanks for having me, Kyle, and the crew at CFI.
Right on. Listen, as you can imagine, we're going to talk ESG today quite a lot. In particular, I'm really excited to have Noah talk a bit about his career, but then we're going to weigh in on the state of ESG careers so we can get some insight about what sorts of companies are hiring and in what capacities. And that'll be both within financial services and elsewhere. So this will be a great discussion for folks that are really into learning about the ESG employment landscape. Now, to start, a lot of our audience members will have heard about ESG, but often through like an investing lens. And of course, it goes so far beyond that, as we know. We've asked you to do this a bunch of times, but can I just ask you to define ESG? Like, what is ESG other than a political football in plain English in your words?
Absolutely. Ultimately, what we're talking about is a management framework for addressing the risks and opportunities of a changing environment, changing societal expectations in a changing economy. So really, it's just a reaction to these risks and opportunities. And the ESG acronym gives us a holistic framework to be able to discuss and think about it.
Got it. So again, in plain English, why does ESG matter?
Because at the end of the day, whether or not we're talking about these things or not, climate change is creating billions of dollars in physical damage. We know that labor issues are real risks in terms of labor walkouts or strikes or having the ability to retain top talent. And we know that managing a company requires good governance, the policies, protocols, and performance measures that enable you to successfully manage a company. So whether we call it ESG or just effective management, we're talking essentially about the same concepts.
Okay. What do you think is the biggest misconception out there about ESG?
Yeah, so I think there are a lot of misconceptions out there, Kyle, but one of the biggest ones is that ESG is about your values. So there's a lot of talk around these are our corporate values, or we want to invest in alignment with our values. At the end of the day, ESG is really about value creation. How do we create more value by being more responsive to the needs of our stakeholders, considering environmental, social, and governance issues as real business issues? That's ultimately what we're discussing here. And it's important to really differentiate those two because a lot of folks have been concerned about ESG as a driver for positive impact. But at the end of the day, we're talking about managing the risks and opportunities of these issues to a company, not about the good work that they can do out in the world.
Got it. So I've heard it characterized, and I'm going to paraphrase, so correct me if I'm wrong. I've heard it characterized as like impact investing, or the concept of impact is like a company's impact on the external environment, whereas ESG is sort of the external environment, whether it's a labor or climate related issue on the company itself. Is that a fair characterization?
Absolutely. Absolutely. It's the impact is, right, what are you doing outside of the four walls of your company to positively address the environment or your various stakeholders? And the flip side, ESG is really how do these issues influence our company's performance? So spot on, Kyle.
Okay. No, that's helpful context. I mean, it's always struck me as a sensible risk management framework, right, for any kind of operating company, but it is really, really taken a beating in the media. And it seemed like this looked like it was led by like special interest groups, maybe on the political right, certainly in North America. But I was starting to get the sense that there's actually more like a widespread notion now out there that ESG is just a sham. Like, for example, I called out an article a while back now in CFI's, we have a members only community, and it was about how Philip Morris International, PMI, scored a better ESG rating than Tesla by what is by all ratings like a reputable global rating agency. And it had people just totally up in arms. So it kind of begs the question for me, what's wrong with ESG right now? Like, obviously you don't believe it's a sham, but what's wrong with it? Why is the public perception so down on ESG?
Absolutely. And there's a lot of really great points, Kyle. And I would say right now, ESG really has a PR problem in the sense that the brand of ESG is now equated with these political leanings or, woke business or these concepts that, as you mentioned, the right are really trying to emphasize in these anti-ESG policies and rhetoric. But at the end of the day, right, whether we're calling it ESG, responsible investment, good management, we're really talking about how do you manage these issues as it relates to your business. So thinking about the Tesla and Philip Morris example, Philip Morris is being rated, Tesla's being rated, right, on the way they're managing the risks of climate change to their business, the way that they're managing their people, in the way that they are putting controls in place to ensure that they are addressing these things holistically across the business, all of which has nothing to do, right, about the impact of their products or services. So in the Tesla example, obviously their product, the electrification of the grid and electric cars, it's inherently positive, yet the management practices at Tesla still have widely reported discrimination, widely reported challenges with governance and safety. So it's more about those issues and how you manage the company versus the outcome of your product or service out in the world.
Got it. Okay. Yeah, I mean, it's a good characterization. I think it has a PR problem. That's certainly a good way to think about it because it does, according to what I'm seeing. So maybe you can tell us a bit about Row Impact. What problem or problems is Row solving in the market? And then if you could perhaps break that into both the advisory arm and the Crane tool, just fill us in a little bit about Row Impact.
Yeah, so at Row Impact, as you mentioned, we're an ESG advisory and software company, and we really focus on two key segments, both investors and operators. On the investor side, what we're really focused on is quantifying the impact of their portfolio. And specifically, and currently, as it relates to the Crane tool, what is the emission reduction potential of their portfolio or a specific portco's technology? So that's really about looking to the future and forecasting what is the impact of your product or service when it's deployed out in the world. So very much focused on that more impact angle. How does our technology or product advance emission reduction in these various scenarios? On the other side of the business and our work with operators is really around ESG implementation, the fundamentals of ESG planning, implementation, and reporting. And our platform for that, Gemini, which is our commercial platform, is essentially a digital version of ESG planning, tracking, and reporting best practices with guidance in how to leverage the range of data science tools and machine learning models to simplify the process and accelerate performance.
Are your clients mostly public or private?
So we have a range of clientele in terms of public companies, recently IPO'd companies, preparing to IPO companies, all the way to your two-person climate tech startup, pre-commercialization. So on the emission reduction potential or the forecasting work, that's really focused on earlier stage companies that have a particular product or service or technology that is going to avoid emissions in the future or reduce them in a various scenarios. On the other end, with the ESG implementation work, similarly, small to medium-sized companies that are planning to scale or are facing increasing investor expectations and customer requirements around ESG, that's typically where they find us. And how do we start to execute on the fundamentals so that we can get the range of value and be compliant with these increasing expectations across their customer bases and from the regulatory environment?
Right. Which is changing quickly.
On a daily basis.
Yeah. Okay, thank you. Love to turn our attention to your career a little bit. And it looks a lot different from many of the folks that I interview who are in more of sort of a purified finance or banking type role. But what a journey. You spent time in organizational development, active military service. You played on the Israeli national lacrosse team while also serving as its director of strategy, development, and impact. Only then, kind of later in your career, did you start getting into ESG. You have a master's in mediation and applied conflict studies, I believe, and an MBA in sustainable innovation. Like, I barely know where to start, so maybe we can just go chronologically, right? Let's start from the beginning of your career. Maybe give us like a 3 to 5 minute run through. We can start with Keurig Green Mountain and then bring it all the way home to today with Row Impact.
Absolutely. So Keurig Green Mountain, now Keurig Dr. Pepper, one of the largest beverage companies in the world. Back when I began my career, really in 2010 out of school, Keurig Green Mountain was the only public company in Vermont, and at the time a Fortune 500 company, and in a pretty well-known company for, I would say, a lot of themes that are reminiscent of ESG. So things like employee engagement and appreciative inquiry and organizational learning, and these things that were pretty avant-garde at the time from a management perspective. And I started my career there working in the enterprise organizational development office. So essentially supporting pretty much all departments internally around managing change. So change management was the sort of day-to-day responsibility in workshops and working through implementation challenges for various initiatives across the company. So I had a chance to work with folks that were in supply chain management, doing all of the supply chain stewardship work. I had folks that were operations leaders and HR leaders, and essentially enabling the whole company to go through the change management process at the time, which was going through an acquisition of Keurig taking over Green Mountain. So it was a really interesting experience to see the commonalities internally with kind of core management or governance issues, and how these management and governance issues influence various functional areas like supply chain management and operations and sales. So it was a really fascinating look again at what a lot of governance activities include from an internal perspective across the entire functional setup of the company. And then it took me to Israel to support the Israel Lacrosse Association, the social venture I was a founding member of that ultimately would be what today we call, ESG program management. So we would work with a variety of corporations, academic institutions, governments, nonprofits to essentially mobilize collective action on these lacrosse-themed community development programs between Palestinians and Israelis. And we'd work closely with a lot of the CSR leaders from these various sporting corporations. So that was a really good insight into, I would say, the particular relevance to ESG was the absolute necessity of stakeholder engagement and collaboration in executing a lot of these initiatives that require coordination across multiple parties and a real consensus building and collective, movement in a shared direction. That all led me to being drafted into the military. And I would say after that experience, that again underscored the criticality of governance and of, ultimately to training and development. So, being here in a training discussion, it was, I think, the most illuminating look at without proper training and clear governance of that training, it is really difficult to create any new actions or new behaviors from an organizational or group level.
I'm sure, yeah. What a case study.
Yeah, absolutely. And then, fast forward a little bit after the military, I'd returned back to business school, got my MBA in sustainable innovation from the University of Vermont. And it was after that I had began to develop my own portfolio of ESG related clients. Back then we'd call it strategic CSR, as well as
CSR being corporate social responsibility, right?
Exactly. Because I would say, ESG was still a really fringe term back in 2017 for folks that were either in really alternative investment spaces or working at, some international development fund. But most folks were still operating in a corporate social responsibility, sustainability, director of corporate philanthropy, these kind of roles that were the predecessor to a lot of modern ESG roles.
Got it.
So fast forward a little bit, I had spent a couple of years serving as the senior director of the ESG practice for a West Coast consulting group called Summit Strategy Group. I had a really fascinating experience across different industries, client types, types of ESG challenges. And it was after a couple of years doing that work that I really wanted to digitize a lot of the work we were doing. And I was able to find my founding partners at Row Impact who brought the data science and software engineering backgrounds that were required to really create the tools ultimately that I would have wanted to use as in my role as a consulting practice leader and fractional ESG director for multiple public and private companies.
Can I ask, that was a great background, by the way, but did you make like a conscious decision to say, I'm going into ESG, or did it just kind of happen organically? Like it just sort of evolved?
You know, Kyle, I feel so lucky that ESG became a popular and kind of mainstream concept because I was really conflicted around, I'm very fascinated in environmental issues, but back then sustainability departments were rare. They were small. There wasn't a lot of openings.
Probably not a lot of funding either.
Not a lot of funding. You know, then there was the social impact space and the nonprofit space. And again, it didn't scratch all the itches that I had. And then there was the governance element and all the organizational development work. So I couldn't really decide where to go, and I was trying to do it all. So I was working in functions that enabled me to address those issues, was able to build up a client portfolio of what today is very similar to the work I do today with ESG consulting work. And that's how I was able to sort of accelerate my own ESG consulting work as the rest of the field, caught up and ESG became a mainstream concept.
Got it. Okay. Yeah, no, it sounds like your timing was really good. What do you consider to be the biggest miss or like regret of your career? Do you have any?
Yeah, I'd say my biggest regret is I always had wanted to have an experience in a Big Four consulting firm. I always struggled to have the timing between my military service and international experience, having a family, in the timing never seemed to line up for that kind of experience. So that's my one regret, is wishing I've had the chance to see what a Big Four looks like. Yet on the flip side, I'd say the professional grittiness and resilience that I had to develop in selling my own book of business and trying to figure out where to slot in gave me a lot of skills that I don't think I would have developed without that necessity in a more cushy Big Four role. But I still would have liked to have it.
Yeah, no, that makes sense. You definitely carved your own path for sure. Did you have any mentors along the way that were particularly helpful on your professional journey?
Yeah, I'd say in each role that I described in terms of my own background, there were people that were teaching me, even if it was not intentional, in terms of both what to do and what not to do, and how to act and not ideally how to act. I'd say some of the biggest influences I had were really coming back to business school post-military and seeing that there was this world of environmental, social, and governance work and needs that was just emerging as I was returning back to the States. And that was, I'd say, was one of the most influential kind of group of mentors who were doing this work way before it was cool and kind of laid the foundation for the rest of us in terms of methodologies and frameworks and ways to think about it. So I'd say it was really that experience from a directional perspective that was really powerful, especially coming out of the military. Folks typically are, what do I do next? And I feel very fortunate to have met people that were doing this and building a graduate program around it.
Other than the Big Four, which you mentioned, if you could travel back in time, what would you do differently, if anything?
Yeah, I think if I could go back in time, I would have perhaps been a little bit more intentional in the long run about where I was ending up. I was a bit following, a cliche, following my heart, following my passions, following where my skill sets were. And I also felt at the time that my work abroad and in the military, there's a very short time frame for that. So I needed to jump in the small time frame I had. But I'd say if I went back and redid it, I would have wanted to have, I think, a little bit more of a long-term plan of where does all of this lead? And luckily it led to this discussion and, this world of ESG work. But for the folks out there, I'd say it's definitely great to have a game plan, at least thematically, of where you want to be directionally going to connect those dots.
Yeah. Is that kind of like the 1, 3, 5 year plan, just to help make sure you're able to check in periodically and regroup?
Exactly. And making sure that, what you're doing today is moving you forward to where you want to go in 5 years, which, at the time, and especially serving in the military, and I didn't have that long of a purview, But in retrospect, I think that would have been especially helpful in just, charting the path over a longer time frame, longer time horizon.
Okay. Are there any authors, thought leaders, podcasts, books that you recommend our listeners check out?
Yeah, well, I have to, mention, shout out to the SEMBA Sustainable Innovation MBA program at UVM. Is Stuart Hart is one of the godfathers of this work. Books like Capitalism at the Crossroads, Conscious Capitalism. Those are two classics that I would say are sort of foundational to this work. Some other great books, what's his name? Mark Porter over at Harvard and Shared Value Creation. He has a lot of writing around the stakeholder value creation concept of how do you create value for all of your various stakeholders. Critical to ESG. I'd say that's another area of literature to check out. And also I would say books like Peter Senge's Fifth Discipline and Purpose that talks about systems change is critical. And I'd say it's that notion of changing systems that's so critical to when the rubber meets the road in the ESG implementation work. Mm-hmm. Having a real understanding of that is, gold in terms of getting tangible movement within an organization.
Right. Yeah. Okay. Thank you for those. You want to play a game?
Let's do it.
All right. This is a fun one, and I can only play it with people who aren't like purified finance folks. And obviously we just went through your background. You don't work at a bank or a brokerage. So the game's called Finance or Fiction. What I'm going to do is I'm going to give you a word or an acronym, and you have to tell me if it's finance related or if it's not, completely maybe made up, maybe just not finance related.
All right.
I'll give you an example. Net income.
Finance.
Okay, there you go. So you got the hang of it, right? All right, first word. It's actually an acronym. EBITDAX. EBITDAX.
So that feels like a trick question. I'm going to say no with the X. That's fiction. EBITDA.
That is a word.
So I know EBITDA, but the X threw me off.
Yeah, started off with a tricky one. EBITDAX is EBITDA, earnings before interest, taxes, depreciation, amortization, and exploration expense. So depending on it's for like oil and gas companies, depending on the accounting standards, have different ways to account for exploration. So that was a tough one.
Oh, that's a good one. Exploration. All right.
Straddle.
I'm going to say that is in the context of investment finance.
Yeah, you got it. Yeah. Straddle is an options trade. I don't totally understand it. I'm not a trading guy, but I think you buy and sell a put and a call on the same underlying asset, and you make money if there's volatility, something like that. But it is real. It's an option trading strategy. Okay. Sandwich.
Kyle, I feel like these are all trick questions. I'm going to say not finance.
That's correct. Yeah, it's lunch.
All right.
It's just stuff between bread.
Not a fancy investment strategy.
No. Okay, number 4. So far, so good. You're 2 out of 3. Lumina bond.
I'm gonna say fiction.
It's fiction. Yeah, it's made up. Okay, totally made up.
All right.
That was a ChatGPT generated fake finance word. All right, last one. Candlestick.
Fiction.
That's a finance word. That was a tough one. It's a type of chart that's used by traders that they're doing technical analysis. So
candlestick.
That is a finance word. Yeah, candlestick chart.
Wow, you learned something new.
Though. Not bad. 3 out of 5. That's pretty good. I like that game, actually.
Yeah, that's a tough one. Candlestick. Got it.
There you go. Okay. That was funny, actually. I've been dying to do that. Let's dive into some discussion around the professional landscape out there. So we're going to talk about roles and opportunities within financial services, but then also roles outside of banking and insurance. Think like, corporates of all stripes. But before we go to either, let's sort of zoom out for a minute so we can understand kind of the full scope. And let me ask, for our listeners that maybe don't have a finance background, but are still really into ESG, in what other functions within an organization, so like outside of the finance team, in what other functions are there opportunities to make your mark with ESG skills and expertise?
Yeah, so I would say every functional role is going to require some extent of ESG capabilities and education. So when you think about implementing ESG, let's just riff on this for a bit. Procurement, right? The chief procurement officer is going to need to understand ESG in order to reduce the emissions or associated impacts of the products or services that they're procuring. That's part of their company's, at this point, financed emissions or purchased emissions, for example.
Okay.
From an ops role, you're going to need to understand how, improving energy efficiency and reducing water use and all of these things are direct cost-cutting measures that improve efficiency, improve, resource use. When you think about legal counsels, all of the explosion of ESG disclosure regulations that are
that's true.
driving this forward, they're going to need to understand not only the regulations, but really how to speak to these issues. When you think about sales and business development, with all of the ESG procurement requirements trickling down from these public regulations to the private companies or any company on the supply chain that's working with these public companies under these regulations, they're going to need to be able to speak the language and determine and really, substantiate their case of how their ESG work can positively impact the ESG commitments of that public company or that brand name buyer. So whether or not it's direct capabilities, everyone's going to have to learn to speak the language and be familiar with these issues because they are cross-functional in nature, and implementation requires the coordination across a company to make it happen.
Right, that's an interesting point. And I guess HR would be another one, right? Like with human capital management being such a big part of ESG.
Great point with human capital and diversity, equity, inclusion, and really the people elements of the work, right? And at the end of the day, we know organizations are just collections of people with a common goal and tied by a common bond, and right, that all requires upskilling and organizational learning and building the systems and structures to implement it across a group of people.
No, that makes sense and helpful for context. So with that sort of backdrop, let's start with financial services. What types of roles and responsibilities exist out there within the sector? So thinking like, banks, brokerages, asset management firms, insurance, and so on.
Yeah, so I would say there are many sort of shades of ESG across these different groups. So, let's take insurance, for example, where, insurance folks are going to have to be able to account for climate risk and labor risks and all these issues when creating their insurance terms. You're going to have to think about on the financial services side, folks that are needing support with due diligence and M&A transactions, and that will all require an understanding of environmental, social, and governance issues and how they relate to those, to those needs.
Can I ask? Sorry, I don't want to interrupt, but I'm interested in M&A specifically, and I have my own thoughts. But why is ESG particularly relevant in the context of M&A?
Yeah, I would say, to sum it up short and sweet, it's all about managing risk, right? Where today, there's a lot of great data out there around the due diligence being done globally, in that ESG issues, uncovered within the due diligence phase have prevented some significant transactions from occurring because of that risk exposure to whether it's climate risk or reputational risk, due to not being compliant with disclosure regulations. On the flip side, Kyle, there's also the massive market for decarbonization services and products and all of the things that are required to make this global transition to a net zero economy. Mm-hmm. That's a multi-trillion-dollar opportunity in terms of everything that's needed to make that happen. So you have a lot of groups, a lot of companies that are looking at M&A as a way to boost their own ESG credentials and value proposition by acquiring groups that have these products and services and technologies.
Interesting. Okay. So we have insurance, M&A, products and services. Are there any others that you wanted to touch on?
Yeah, I'll just quickly draw upon just the investor persona or role. You're having this explosion of various ESG and impact funds, and that requires, the skills to formalize an ESG strategy, to have that due diligence for investments, to be able to support your portfolio companies in providing the data that's needed for reporting. That will all require ESG capabilities and knowledge, whether you're an ESG director officially or the person in charge of ESG in terms of incorporation into that investment strategy. And at the end of the day, Kyle, I think it's important to call out too that every company will need an ESG lead in some shape or form, whether it's a finance company or your broader sort of corporate landscape, because of all these requirements that trickle down from these global disclosure regulations into the public companies where, a head of sustainability or ESG is becoming table stakes. And then private companies or, other companies in their supply chain are now seeing that they really need an ESG director as well in order to meet all these procurement requirements.
Right.
So you're seeing this real proliferation downstream around everyone needing to be able to have these capabilities, provide this data to be compliant really with these regulatory and customer requirements.
Got it. We hear the terms ESG analyst and ESG practitioner, and I'm just curious to get your take. Are these the same thing? And if not, what are the key differences and similarities? And forgive me if that's kind of a dumb question. I'm not sure.
Oh, that's a great question. And I'd say, there probably is not a single answer broadly, but I'll just give you, the way I cut the pie
Depends who
here.
you ask, kind of.
Right, exactly. I would say that ESG analyst is really someone who's doing traditional analyst work, right? Doing research and analysis on companies, on potential investments, on macro level forces that are influencing the market. Whereas an ESG practitioner is really about the doing in terms of supporting the execution of ESG implementation work, whether as a consultant or as an in-house director. And that's really, I'd say, aligns with the operator segment in the practitioner, and then the investor segment in the analyst. That's a good way to sort of categorize them in terms of buckets.
Okay. That's helpful. What are the most important skills or characteristics, do you think, maybe technical and qualitative, in order to be an effective ESG analyst or practitioner?
Yeah, so I would say, let's start with just the domain expertise. At the end of the day, you need to have a little bit of familiarity with the issues themselves, right? Climate change, labor management, the broad section of corporate governance issues. Without an understanding of the issues themselves, it's really hard to interact with that information, whether qualitative or quantitative, or to have the context to understand it. So that's one element, is just familiarity with these issues that are discussed and how they are relevant to an organization. On the flip side, too, it's helpful to have an understanding of just of business functions. So understanding, ops and HR and finance and the basic functions that need to be contributing to a company's ESG performance, so that you're able to provide good assessments or analysis on where they should be able to improve, or what are the, the key areas that they need to advance to be compliant with your due diligence requirements. So it's really helpful, again, domain expertise of these issues, as well as just an understanding of how a business operates and the functions that are required, so that you can have real insight into how to actually help them and to assess their performance.
From an operator's perspective, some of the things you just cited around like cross-functional understanding of the organization, maybe understanding KPIs. I'm wondering, because we keep hearing, every time I interview someone within the finance function of the corporation, we're hearing about the evolution of finance as a function and how important it is to speak the same language across the organization. And I'm wondering if there's sort of like natural synergies between the finance group and, ESG rollout within that organization, just because of the sort of key piece of the flywheel that finance is, right? Just in terms of getting data from all these different areas, being able to make sense of that data and deriving actionable insights from it. So it seems intuitive that folks who are interested in finance and that have good data skills are probably also going to be relatively successful in making sense of ESG information as well. Is that accurate? Is that fair?
I think that's a really fair assessment, because, at the end of the day, carbon accounting, for example, or greenhouse gas accounting, right? A common activity within a company and a portfolio. At the end of the day, right? That's an accounting exercise. And if you understand accounting, you have a pretty good head start on understanding carbon accounting in terms of the basic functions and fundamentals. So I'd say that element, as well as all the modeling experience that an analyst has, and being able to model the return on investment for a sustainable investment, whether it be a new HVAC system for a facility or investment in a carbon capture project investment, that you're able to model out the, really the ROI, because at the end of the day, we know that none of this stuff moves forward without an ROI component to it. Mm-hmm. And being able to really speak the language from a domain expertise in these issues and connect them to the return on investment, the return on impact. Very similar skill set, I'd say. So I think you're spot on that inherently financial analysts have a good skill set for a lot of the ESG analysis and finance work that's required to move it forward.
Got it. Okay, cool. Where do you see these jobs or these roles kind of going in the next 5 years in terms of evolution?
Yeah, I'd say that there's going to be this continued explosion of ESG roles and needs across organizations in general. You're seeing it in nonprofits that traditionally, right, they already have a mission that's ESG centric, but they're creating ESG directors to operationalize this stuff from a management perspective. You're seeing on the other side really niche finance groups break out that are doing a lot of the, green bond development and supporting access to carbon markets and all these different both sort of sub-verticals and market opportunities that are becoming more and more lucrative because of the big need for things like quality carbon offsets, investments in these technologies that have a significant emission reduction potential. So I think you're just going to continue to see this proliferation of the roles, whether they're called ESG roles or simply, within the roles and responsibilities of ESG being under your role. I think it's just going to continue to expand rapidly across, every type of organization there is.
So you sort of touched on something that I was curious about outside of financial services. So we're going back again to like corporates and operators. Certain sectors obviously need a lot of ESG expertise. Something like energy, for example, would be one, which is fairly obvious. But are there any sectors or industries that might surprise us where like there's a massive need for talent, but that's not being filled?
Yeah. So there is such a talent war out there right now. So I'd say it's really, a seller's market from an employment perspective. But what I think a lot of folks are starting to see and recognize is, not only is it energy that's needing a lot of this kind of work, but it's really any heavy industry, manufacturing, food and bev, anything that's making a tangible product and moving it around the world. That's a very obvious need in terms of needing to cut, the emissions associated with all of this heavy industry. But what's less obvious, I'd say, is on the, the high tech side, right? Where folks typically respond, where we make a software product or we're in technology, we don't make a physical product. But at the end of the day, we know that there's crazy amounts of emissions and impacts associated with all of the data centers that store that data. We know that there's significant water required to keep those systems cool. So there's all of these elements behind the scenes that may not be immediately apparent, but folks are starting to recognize that high-tech companies need ESG roles and responsibilities because folks are starting to focus on peeling back the onion further and further and seeing you might not make a tangible product, but look at the emissions associated with holding on to that data. And that's, I think, a real aha moment for, the broader market is this isn't just about folks that are making stuff and moving stuff. It's really about every organization because we all touch it in some shape or form.
Right. And of course, financial services finances it. So there's that element too. What about geographies or markets? Like, are there physical geographies or jurisdictions where there's more or less opportunity for folks that want to work in ESG?
Yeah, well, I'd say, of course, the EU immediately jumps out just given how advanced they are with the Sustainable Finance Disclosure Regulations, SFDR, going into effect. The UK and France, although, well, not the UK anymore, but the UK specifically also has a lot of increasing ESG disclosure regulations, pointing to the need for a lot more roles and support in that space. You're also seeing an explosion of ESG disclosure regulations in markets like China and India, Singapore, and these places that are starting to have a more rapid pace than we even have here in the US around these rules. And those, I think, are really exciting, particularly given CFI's, diverse learning, students and the broad scope that you all have. It's really exciting what's happening in those emerging markets that I think is really the unmet opportunity so far.
Yeah. Could you use kind of evolving regulations as like a proxy for where opportunity is going to emerge?
I think that's a really smart way to think about it. The stick, right? So at the end of the day, the stick is really moving a lot of this forward, and it's coming particularly from the regulatory environment. So yeah, I'd say that's a great way to anticipate where the role is going to be. It's where the rules are going to be, right?
Yeah,
the rules
yeah.
lead to the roles.
Yeah, I like that. That's a good, catchy way to remember it. How should people think about the differences or the similarities between ESG work in public versus private companies? What are your sort of general thoughts on that?
Yeah, so in a public format, I would say the stakes are just so much higher, right? Particularly around the quality of your reporting because of all of those regulatory requirements.
Mm-hmm.
But on the flip side, I would say for private companies, that's really where the rubber meets the road in terms of ESG driving really the core elements of what you need as a high growth, private company: capital, right? Brand name customers, employer retention, good credit terms and insurance terms because of your superior ESG performance. So I'd say it's very similar from a day-to-day role. The stakes are much higher publicly because of the reputational risk exposure of putting all these things out in the public and needing to abide by all these rules.
Right. And the ability for, the buy side to vote with their wallet and really punish the stock price as well, right? Well, anyone that's still listening at this point, I imagine is either they really love the podcast, or more likely they're like a legitimate ESG enthusiast. So I think this advice should be sage for folks that have stuck around, because we all run into skeptics, and not even just skeptics, but like downright haters. So you've been doing this a long time. You've been doing ESG since, quote, before it was cool. What advice do you have for our listeners when they get into like a heated discussion with a coworker or a family member about ESG? Do you have any sort of general advice?
Yeah. I would say always keep it framed on the business case, right? We know these things exist of billions of dollars of climate damage. No one can argue with that, whether we call it, a divine act of God or physical climate risk. So I would say keep it focused on the dollars. We know, and the other thing, Kyle, is if you're talking to folks, we can always say, well, look at the news today, because we have daily examples of, of labor strikes that are hard dollars and cents in productivity, right? And water shortages so that a facility can't operate. So again, I would keep it focused on, jobs, supply chain, ops. Keep it focused on the business. And it should be an easier discussion to help illuminate why does this stuff matter to a business in today's world.
Yeah, it can be really easy to like draw a line in the sand and start butting heads over values. But it's an interesting point. It's a valid point. You can't change people's mind necessarily. And I've heard before during interviews and chats that like shouldn't try. Don't try to change someone's mind. Just highlight why it makes sense from a business perspective. And I love that lens of these are the risks. This is what's happening, regardless of what you call it or why it's happening, it's happening. And you need to be prepared as an operator. And if you're investing in those companies, you need to understand those risks. So no, that sounds like really good advice. If you weren't doing what you're doing at Rowe, what would you be doing?
Yeah, great question. Well, maybe I'd be working at CFI.
Maybe.
Yeah, I mean, if I wasn't at Rowe, I would say I would be probably trying to get more into shareholder activism in terms of, twisting the arms of some of these big and dirty companies to move in the right direction. That's either going to be my next thing post Rowe Impact, or if I wasn't doing this, I think that's probably where I'd gravitate towards. But hopefully that'll be the next chapter of, getting on the boards of the dirtiest and worst companies and putting them in a headlock to move in, this direction.
Well, that'd be interesting work for sure. Where can people go to learn more about you or Rowe or even just ESG more generally?
Yeah, well, I'd say a great starting point is, of course, CFI's ESG specialization. That's, Thanks for the plug. That's where I would point folks first. And then, from a Rowe Impact perspective, roweimpact.com, as well as thecranetool.org, which is one of our public good tools. It's a website speaking to the emission reduction potential tool that we've developed with the Prime Coalition for Catalytic Capital. You can check that out, and you'll get a lot more context for some of the stuff we talked about: emission reduction potential, scope 4 emissions, forward impact.
Awesome. Noah, thanks for your time. This was a really useful chat. And on behalf of our listeners, thank you for your insights and your wisdom today.
Well, thank you for having me, Kyle. It's been a blast.
All right. Till next time.
Thanks for listening to this episode of Net Learnings. This podcast is powered by CFI, an organization on a mission to enhance the skills, knowledge, and productivity of finance and banking professionals. If you enjoyed what you heard in this episode, make sure to follow Net Learnings wherever you listen to your favorite podcasts, or visit us online at corporatefinanceinstitute.com/podcast. See you next time.